You to Thai Union Group first quarter year 2017 result announcement. Today, the executive who are joining us today are Mr. Jörg Eyring, Thai Union Group CFO, Mr. Ludovic Garnier, Head of Group Accounting and Controlling, and myself, Bess Vayanon, Investor Relations Managers. This event will comprise of approximately 30 minutes of presentation session. Then at the end of the presentation, we'll provide a Q&A session of approximately half an hour. Please do note that this conference call session will be conducted in English. For any participant who have any inquiry for our management, please type in the question box on the right and click send. We will raise them during the Q&A session post the presentation. Now I would like to invite Mr. Jörg Eyring, the Thai Union Group CFO, to start the briefing. Thank you.
Thanks a lot, Kun Best. Welcome investors, analysts to this webcast. The webcast has proven a good tool on the day of our earnings release to share with all of you the recent developments, the performance of the last quarter, and it allows investors as well as analysts and fund managers to ask questions on the recent development. Let me jump right into page 5 of our presentation. Now we have a similar problem as last time. It's not coming. Here we go. Page 6 of the presentation are the key highlights for Q1. We have achieved, and I would like to start with that, a net income of our operations of 1.469 billion Thai baht. That is 1.5 billion Thai baht, 4.7% of sales, and it is a growth of 19.3% to the prior year. We have also reached a revenue level of 31.4 billion, which is a growth after translation effects, currency translation effects of plus 0.7%. And let me highlight right here, if we eliminate translation effects, a weaker US dollar to Thai baht, a weaker British pound and euro to Thai baht, if we would eliminate this, our revenue growth would be 3.5%, which is still quite a resilient growth and stable quarterly growth in this first quarter. On the flip side, and we are very transparent on this development as well, gross margin is not where we wanted it to be. We are just close to 14%. I think the run-up in Q4 and Q3 last year was already a sign that we may need to start the year with a little bit of a lower gross margin percentage. We are ending up close to 14%. Certainly not something we want to continue during the year, but I think given the headwinds that we see, and I will show a little bit about that a little bit later, it is still quite an impressive performance, especially as we have turned the 13.8% gross margin into a 4.7%, 1.5 billion net income. If I go one page further and give you a financial summary, total sales, as I mentioned, plus 3.5% without currency translation effects, plus 0.7%, including all the negative translation effects. Gross profit has dropped. Operating profit is down 45% as a result of the gross profit drop. But then on EBITDA level, we are basically equal to 1 year ago in net profit plus 19.3%. Net debt to equity, we started the year or ended last year on a net debt to equity of 1.37. A reasonable cash performance during the year has helped us to lower this slightly to 1.34 times net debt to equity. And if we look at our share price, we can also see, at least until May 5th, we see a 4 to 5% share price increase. So I think we're starting the year a little bit low from an operating performance, but if we look at the underlying net profit that we can deliver out of this, it's a very solid 19% increase to prior year, Q1 2016. And on page 8, I'd like to share, this is what we usually do, a little bit of a long-term development, and I think you can see here nicely how stable and resilient the overall net income development is. Gross profit margin, yes, we are down, but on a net profit level, we are very stable here over the quarters, between 4.5%, now 4.7% in Q1 17. And I'll come to a little bit more details on the backgrounds of the softer operational performance after the next section. Before we jump into the numbers, I'd like to share some recent developments. We've been again recognized for several achievements in Finance Asia, from the AAA awards. We have received awards. We are launching, as we speak, tuna in Germany. If you recall, the acquisition in Germany, Rügenfisch, that we did, was on the backdrop of launching ambient tuna in Germany, where we were not present, and we are, as we speak, with products on the shelf in Germany. We've also launched 1 month ago a new frozen seafood brand under the name of Q-Fresh here in Thailand. Q-Fresh is, on the one hand, our e-commerce platform and an online shop for consumers and food service in Thailand, and it is, on the other hand, our retail brand for frozen seafood that we want to bring and grow here in Thailand to the market. And we had a couple of investor relation activities. Just as a recap on dividend payments, page 13, we had proposed a dividend for the year of 63 baht per share, and with this for 16, and with this we are on equal levels to 2015, and you can see here nicely on this chart we have adopted a policy where we want to keep shareholders comfortable about the earnings development of the company, provide a constant earnings and dividend stream to our shareholders. So payout ratio for 2016 was 57% of our net income, and we have been, since 2005, consecutively been able to increase our dividend per share that we are paying out to our shareholders. Let me jump to page 16, and here you will see why I said there are a lot of external influences that we are dealing with as we speak in the market and in the seafood industry. There are a lot of headwinds that we were looking at, and I've just listed 5 of the key themes that we are discussing and that you will see in our financial performance, operational performance. The key theme is raw material prices. We see high tuna prices, high shrimp prices, and also high salmon prices, and especially in tuna, the difficulty to to pass price increases to consumers is causing margin pressure for our branded business in Europe especially, but also there's an extremely high competitive pressure in our private label business where competitors of ours are trying to capture volume at really difficult and very, very low margins for the business. So high tuna prices is one of the headwinds, and those of you who joined Q3 and Q4 earnings calls last year, this is nothing new. This is since we went into the second half of last year, we are facing a difficult tuna price environment. Shrimp prices have rapidly increased in Q1, which put a lot of pressure on our profit margins, especially in Thailand. And salmon prices, well, the good news on salmon prices is that we have been able to reprice in the marketplace. We have been able to increase our prices to our customers. As a result, our gross margin is positive for the second quarter in a row. If you recall, the chilled salmon business in Europe was one of the major profitability drags last year with 16 million euro in operating losses. We are now operating at least on a profit margin in the plus zone, and our private label is profitable. But as a consequence, volumes have dropped. So overall, our sales in the salmon, in the chilled salmon business, was affected negatively from lower volumes after we've been able to push prices to the market. Exchange rate volatility, and I will show you a chart on that. No, actually, the chart is not in the deck. But all of you are probably aware when we started the year, the US dollar was on a level of around 35.5, 36 baht per dollar. And at the end of March, we were just below 35 baht per dollar. So there's a huge swing, huge weakening of the US dollar compared to Thai baht. Same with British pound. Due to the Brexit discussions and a general weakening of the British pound, also here we have a negative effect. Now, this has two impacts for us. On the one hand, we have a substantial currency gain in Q1 of 590 million baht, which is mostly unrealized. And some of this may swing back in Q2, depending on how the US dollar does and if the US dollar is strengthening. It doesn't look like there's a substantial strengthening, but some of it may swing back. So on the one hand, we have a positive effect from our X-rate management, currency management, and our hedging result. But on the other hand, we have a top-line depression that brings us from a 3.5% growth to only 0.7%, including the currency effects. Plus, last topic, and I think all of us are very aware of it, and as a European, I'm very happy about the election results yesterday night in France. But still, we do have a new government in the United States, and we need to see, is legislation passed to reduce taxes? Is the protectionism increasing or reducing? Plus, we have continued challenges after the Brexit. So if I would summarize the key takeaways for Q1 and the Q1 results: resilient sales growth, plus 0.7% year over year. some currency effects and soft demand. Second, we have a weaker gross profit margin from high raw material prices, especially in tuna and to some degree in shrimp, put substantial pressure on our profit margins. Meralliance, as I mentioned, the repricing was successful, but it comes at the cost of lower volumes. We have prudent cost control. We have not completely been able to variabilize SG&A, but there's only a very moderate growth in SG&A year over year, and we will focus on SG&A and our cost structure in the remaining quarters to make sure we are not running out of the guidance of 10% on revenue. Q1, we got a little bit above 10% SG&A on revenue, but over the year, we expect this to come back to an average of 10. The very good news is below operating results, we have very strong FX gains, and basically as a result from our hedging policy and our hedging activities, mainly from baht appreciation. And I think the second part, our fishing fleet, which we are in the process of selling, our fishing fleet is also performing much better than anticipated, primarily because of higher fish prices that the fleet can get for their catch. But this is a very good news that our fleet, at least during these last months while we own it, is performing well. And then, last but not least, Red Lobster. And I'm sure there are a lot of questions on Red Lobster, and I'll comment on that in a minute. Red Lobster has contributed 224 million Thai baht to our Q1 net income. And this is both from share of profits, so the underlying business in our Q1 was profitable, and also from the interest income that we get through our convertible instrument. A lot of people asked about Red Lobster and how does it flow through our numbers and how does it contribute to our numbers. So we put a page here, and that's page 19, where we try to explain how are the Red Lobster results flowing through our Thai Union P&L. And I'd like to go through this one by one, and we have here two columns. One is Q4 last year, and one is Q1 this year. And we basically have four levels of income or P&L contribution that we get from Red Lobster. One is the share of profit that we are accounting for. 25% of the reported earnings of Red Lobster is what we are accounting here for. The second part is reported under other income in our P&L, and it is contributed by two items. One is a management fee, a moderate management fee that we get for being on the board of Red Lobster, plus we get 8% guaranteed interest dividend yield on the convertible instrument that we have given to Red Lobster, and that brings us to 261 million baht for Q1. The share of profit was 203 million Thai baht for 25%. You're right, you're hearing correctly. 800 million Thai baht underlying net income of Red Lobster in Q1, that is before tax. And that leads us then to the financing cost. We have, of course, taken up loans and issued debentures to finance the acquisition of the investments in the Red Lobster. The interest expense is 127 million in Q1. And we have, out of the share of profit, and out of the other income, we have a negative income tax or an income tax payable of 113 million Thai baht. And that brings us for Q1 17 to 224 million Thai baht. Net income contribution, that's 0.047 baht, or roughly 15% of our earnings per share in Q1. Now, what is driving the underlying share of profit development in Red Lobster? So what's driving the net income of Red Lobster? It is basically a function of guest count and average check size week over week. And we've put here a graph that shows Q1, 2, 3, and 4. That starts January and ends December, so that's our fiscal year. And there are two very, very important time periods here. One is the Lent period. It is for Christian and people of Jewish faith, the period where they consume seafood more and consume less red meat or no red meat for those who are very strict. So there's a lot of seafood consumption. It's the Lent period that is in our Q1. And we have the Christmas period, relatively similar. People eat a lot more seafood. It's a festive period. People love lobster and shrimp during that period. That's the Christmas period where guest count and average check size is relatively higher to other periods during the year. So in Q1, we assume the highest net income contribution from Red Lobster. In Q2 and Q3, this is much lower. And what happened in Q4, you basically saw last quarter in 2016, there is some likelihood that there's a loss contribution. At least in 2016, that was the case. So in terms of seasonality, for those of you who want to look at Thai Union and anticipate what is happening during the year with Red Lobster, please do consider this line. Q1, great profit contribution. Q2, Q3, not so great. Q4, there could even be some losses. We put some explanation around exactly those topics. The Lobster Fest, that is very profitable. The Shrimp Fest, that is very profitable. Some iconic events that are planned during those festive periods, the Lent period and the Christmas and New Year period, where we earn more money and where guest count and average check size is higher, and the other periods where it is lower. So why is end of Q3, early Q4 lower? Well, that is when people come back from their summer holidays, kids go to school, there's a lot of focus on put kids back to school, a lot of expenses go out for new school uniforms and other topics that need to be taken care of. People are very busy and they've just been on holidays. So that is why guest count typically end of Q3, early Q4 drops, and that is the period where earnings are not as great. Now, if we look at that seasonality and the overall trend of Red Lobster, we started to discuss with you and share with you some of the key initiatives that we, together with Golden Gate Capital, who is the majority owner, 51% owner of the business, and together with Kim Lobdrup, Bill Lambert, the CFO and the CEO of the business, what we're working on and what we discuss every month and every quarter as improvement initiatives to get over the cycle to a much improved EBITDA and to a very strong underlying net income. One is the Kitchen of the Future initiative. It is streamlining the process of cooking in the kitchen, giving more responsibility to a chef, getting out of a microwave, and put better food quality on the plate. A lot of cost savings associated with it, streamlining, faster, food is faster on the plate. So that is the Kitchen of the Future initiative. The Red Lobster signature events, a constant drive to bring new menu items, affordable menu items that show lobster as the iconic product. So menu management is a very important activity. Smart PR activities. We have a very clear target to reduce marketing spending. So we need to bring in smart PR activities. And those of you who like Fast and Furious and watched Fast and Furious 8 with Tyrese Gibson, who is an absolute Red Lobster lover. He was on TV, on shows, on television, showing that he appreciates and likes Red Lobster and stays in for the brand and promotes it to his followership. Number 4, labor waste reduction, another topic in the restaurant industry. How do we variabilize labor to reduce what is called labor waste or waiting times, where a lot of waiters and a lot of staff are in the restaurants, but there are no guests or a low number of guests. And there's a labor management approach, how we can reduce labor waste by 10 to 15% as an objective. And number 5, key initiative, especially since Thai Union has started to invest in Red Lobster, is to drive international expansion, of course, especially in Asia, potentially China, potentially Taiwan, Thailand, some other markets. Very important for us to really show there is growth behind the brand, what we can contribute to the business. And with that, I'd like to jump probably a little bit more quickly through the remaining slides that we have here. Stable sales development, I think we've discussed it. Moderate growth, but if we eliminate negative translation effects, 3.5% underlying growth based on equal exchange rates. If we look at the sources of this growth, a lot comes from shrimp and related businesses, value added and others, pet care. The salmon business overall has benefited from the higher prices in terms of top line, but we do suffer in tuna and in lobster, some contraction of the business. If we look at the sales mix in terms of branded business and geographical coverage, we maintain our share of business, 36% brand, 6% food service brand, and the rest in private label. So we still have a very healthy brand private label mixture, and the food service channel is developing very nicely. The US still contributes 40% of the business, Europe 31%, a little soft, especially due to the weaknesses in our branded portfolio there. and our domestic business still, it's the Thai business still at 8% for the overall contribution. Gross margin, and I think this is the page that a lot of you who analyze our underlying business will be most interested in. I think we discussed it. Second half year last year, not a great half year, and this continues into Q1, mainly driven by high raw material prices in tuna and in shrimp. As I mentioned, chilled salmon, at least gross profit positive since 2 quarters. If you look at the EBITDA development, of course, supported by the Red Lobster performance and currency gains. I jumped over the operating profit. I think that's clear. We discussed it. Operating profit didn't do extremely well in Q1, and I think this is where the key focus of the next quarters will be. But EBITDA, and then moving into net profit development, very strong, supported by Red Lobster and currency gains. 19.3% growth year over year, and a very strong growth also compared to Q4. I think here we are in a 1.5 billion range. That is a very good start in the year from a net income. And now we need to work with our operational businesses in Europe and also here in Thailand to now drive further operating profit improvement. EPS keeps the momentum. That's just the net income divided by number of shares. So we have an earnings per share of 31 satang in Q1 compared to 26 satang in Q1 2016. I think a very solid and good performance. Cash flow, if you recall, last couple of quarters, we were more or less a break even on cash flow, a little bit below. We are now on a cash conversion rate of 0.4. That is a little bit slower than what we had hoped for, but it is already quite clearly positive despite the high raw material prices. So I think that is a good development, and I would expect there's more to come in the coming quarters. Debt maturity, we've refinanced the short-term debt that we had, the bridge fund for Red Lobster. This is now our resulting debt profile. Around 80% of our debt is long-term loans. Of course, mainly also investing into acquisitions. 20% is short-term. Most of the debt is from Thai sources that we then convert into the target or the use of fund currency, primarily euro or US dollars. Our net debt bridge, we started the year with 65 billion Thai baht in net debt. And we have an EBITDA performance, moderate change in net working capital. We have other non-cash items, tax payments. With CapEx of 900 million, this has increased slightly for the quarter. As we discussed, we have started an SAP initiative to improve our IT landscape. So we do see a little bit higher CapEx. We also capitalize some of our R&D expenses that goes into longer-term intellectual property. And we end up with 64.4 billion in Thai baht net debt. That is 1.34 times. With the improved net income in Q1, most of our capital efficiency and return on equity, ROCE, KPIs are improving. Return on equity, 13.5%. I think that's a good development. ROCE, we still have a little bit of work to do on net working capital that you see in the chart next to it. We are now at 121 days. We maintain that we want to get closer to the 105, 110 days in the course of this year. I would then pass to Kun Best, who wants to share a little bit about the individual segment performance.
Hi, for the individual development, I would like to go through the key input factor in our company first. As you can see from this chart on the slide, we can see that the tuna price, shrimp price, and salmon price has been rising very significantly. Tuna by 30% compared to last year, shrimp price by 14% compared to last year, and salmon price by 15% compared to last year. So this is the key challenging that Thai Union has been facing throughout the entire first quarter. On the next slide, we can see that, as Jörg has mentioned earlier, we have reported a soft sales growth, but in terms of due to a lot of our revenue are coming from foreign currency. As you can see here, compared to what it was last year, Thai baht has been appreciated against US dollars by 1.5%, against euro was about 5% compared to last year, and of course due to the Brexit, Thai baht has appreciated against the UK pound by 15%. So that is the key reason why we have our translated into Thai baht sales growth relatively a bit on the weak side. In terms of our strategic business segment, for the three segment, ambient seafood still the largest of our shares. Still contribute 45% of our revenue. Frozen, chilled seafood and related account for 41% of our total revenue, and pet care and value added and other business segment contribute 14% of our revenue. For ambient seafood, we can see here that the revenue has been declining by 7.4% compared to last year. So this weakness was mainly due to the lower tuna business sales volume, particularly in the European market. And of course, this problem has been compounded by the fact that the European currency has been weakened very significantly against Thai baht. Okay, so but on the other hand, despite the weak European market in general, Thai Union managed to pass on the raw material prices increase, particularly in the private label business. Thus, we continue to see the average selling price increase, and you can see that the profit margin from the private label has been improving even compared to last year, despite the fact that tuna price has been increasing very significantly. For the next business segment, frozen and chilled seafood, we continue to see the strong growth with the sales growing at a 5.6% compared to last year. So, this growth has been contributed by both the product repricing. Please note that we have managed to repricing our salmon business, and therefore our chilled salmon business in European market has already broke even on a gross profit level for second consecutive quarters. On top of that, we continue to see the strong volume growth on shrimp business as well. This is partly driven by the stronger relationship with Red Lobster that we have established. Lastly, we have this pet care business, which continue to report a strong revenue growth at 17.4%. And if we break down on the pet care business on standalone basis, it's continued to deliver a strong sales growth to market expansion and product innovation, both of which has contributed to both the solid double-digit sales growth and the margin improvement compared to last year. So, on the big picture wise, out of the revenue we generate this year, we have reported a total consolidated gross profit of 4.3 billion, representing a gross profit margin of 13.8%. I will pass back to York to finish up the last section about the year 2017 business outlook.
Thanks, Best, for the segment information, especially the pet care development, of course, is what we really like to see. Very high margins, continued strong growth. And this continues to be our operational focus to really look into businesses who can contribute strong growth and a strong underlying margin. I just came out of a workshop where we discussed the strategic 3 years plan for our emerging markets businesses, and I'm very encouraged by great initiatives in the Middle East, in China especially, but also here in Thailand and in the ASEAN market. The King Oscar brand is already on the shelves in China. We are growing the brand also in ASEAN and in the Middle East. With John West, we are gaining market share as well. So I'm very encouraged by a lot of these initiatives. Now, a lot of the questions that already are coming in are, of course, with regards to guidance. And guidance, especially on gross margin developments, and also, of course, the Red Lobster contribution to our financial performance. Now, we have put together an updated outlook and an updated guidance for Thai Union and for 2017. I think we do need to be conscious on the relative softness of our Q1 top-line performance, and we have moderately adjusted our sales outlook to be in a range of 145 to 150 billion Thai baht. I think this would still be a nice double-digit growth contribution compared to last year. But I think a soft Q1 does require us to give here a little bit more softness into the top line. In terms of gross profit margin, I think we commented already before that we will likely end up somewhere at the lower end of 15 to 16%, primarily from continuously high tuna prices, and Kun Best commented on it and showed you the tuna price chart month over month. It is really a raw material price situation that requires a lot of efforts from our operating units to translate and to convert higher cost to customers and to the pricing in our products. The effective interest rate, I think there's not going to be any material change from 2016. The higher debt level is compensated by a little bit lower cost of debt. Effective tax rate, I think as a guidance to assume 15% is not wrong. It may potentially be slightly below that, depending on some structuring effects out of the Red Lobster transaction. We do expect to spend 4.8 billion in our capex. I think there's not going to be any change on that. And of course, we will stay with our minimum 50% dividend payout policy. Now, why do we revise our guidance, especially on top line and a slightly softer gross margin? I think it's really from the raw material headwinds that are going through the whole industry. I think we need to be conscious that it may take a little bit longer time to compensate this by pushing to the market. The Brexit is a reality. There's extreme competitive pressure, and there is currency volatility from Thai baht. to the US dollar and to British pound. So I think we're not materially revising here the guidance, but I think it is also prudent to show a little bit of softness. As to Red Lobster and the Red Lobster contribution, if I go back to the chart that we have shown you, I think what is very important is that we do not now take the Q1 numbers and multiply them by 4. That would be rather unrealistic. I think, as I mentioned, the share of profit number that we have shown for Q1 is the best quarter that Red Lobster is showing during the year. So that is a great performance for us, but I don't think we should assume that this is happening now every quarter. I would rather expect that net income, here's the chart, that the net income levels in Q2 and Q3 will be maybe gradually positive, not substantially positive, gradually positive, and in Q4 there might again be a slight loss. I think guidance on other income from Red Lobster is probably relatively stable during the quarters. The finance costs are going to be very stable. We're not going to invest more into it at this stage, so that's also stable. And from an income tax perspective, if the underlying performance is not as good as in Q1, I think the income tax may also be again substantially lower. I don't want to now mention any definitive numbers on where we're going to be in Q2, Q3, and Q4, but I think it's likely a little bit above Q4 2016. It's not going to reach Q1 17 numbers for the rest of the year for each quarter. And with this, I'd like to jump to questions.
Yes, and thank you. Then that's kind of sum up the presentation now. We have received a number of questions from online. We will try to go through each and every question as we can, as best as we can. And here, York will start from the list of questions we have. Thank you.
Okay, are tuna volumes improving in Q2 so far? I think Q2, if you recall, is moving into the high season, especially in France and in some of the European markets. So we are seeing some uptick in tuna volumes. However, this is by far from where we would like it to be. So yes, volumes are improving slightly, but I think we have a lot more work to do to grow this. What is good, we are on the shelf in Germany now with tuna, and that also helps us and contributes to our volume growth. Why tuna business in Europe have any impact? Well, in Europe we are operating a branded business in France by French trade regulations. There is an annual price negotiation with suppliers, and once you have fixed that price, it is very difficult to change anything. So if your raw material cost during the year is increasing, the gross margin, of course, is reducing in the same ratio. So the effect from the tuna business in Europe is directly attributable to increased raw material pricing, which is slowly eroding gross margins in the branded business in Europe. But having said that, Q2, as I mentioned, is a high sales season. So we will see some growth in Europe compared to the rest of the business. So I do expect that Q2 gross margins will be substantially better than where we had been in Q1.
Maybe one point to add on this one. We have also to precise that in Q1 16, the sales in Europe were especially high. We had a lot of sales regarding private label, and we can explain some part of the decrease in Europe happening in 2017 by the decrease of our private label business. Private label business in Europe is not recurring as the branded one, and it's mostly explained part of the decrease of the sale in Europe for Q1 2017.
One question, would you please give an outlook of gross margin in Q2? I think I just mentioned that Q2 is a strong quarter for us, so I would expect gross margins in Q2 to improve, same as for the rest of the year. Salmon, there's a question on salmon gross profit margin. The gross profit margin in salmon is now positive, which is good, so we are clearly above break even. We had some quarters last year with a gross margin of -5 or -8% in some months, so there's already a substantial turnaround and push of price to the market.
Still one more question regarding the softened tuna gross profit margin in Europe. Will it continue for the rest of the year? What we can say is in Q1 it was low. We expect this one, however, to increase and to improve in Q2 and Q3. I don't know if you remember, but we have quite a strong seasonality in our European business. And normally in Q2 and Q3 we expect a change in our mixed country with more sales in France and especially in the branded business. So yes, we do expect the gross profit in Europe to improve on the next quarters to come.
We have one question here regarding the outlook for tuna price. I think the current view is that tuna prices may continue to remain high for some period of time. It is a little bit difficult to predict. Usually tuna prices should be already a little bit lower from what we would have thought is realistic, but until now tuna prices remained high and there is no short-term trend of a reduction. Of course, we do hope towards the end of the year that there is some level of softening.
We have some questions regarding taxes. The first one is related to slide 19, why the income tax contribution from Red Lobster is positive in Q4 16 and negative in Q1 17. I guess it's mainly driven by the share of profit or loss. I mean, in Q4 16 it was a loss, it was a share of loss, so we had a tax credit, whereas in Q1 17 we have a share of income, and as a consequence we have a income tax expense on this one. It's fully correlated. And we have another question about the tax rate, which is quite low in Q1 2017, which is true. It's mostly explained by the fact that this is in Europe where we have the highest tax rate, and as we were saying, the operations are quite soft during this quarter, so it has a direct impact on the tax rate there. And we have also some other impact coming from the structuring of Red Lobster on this quarter.
There's a question around Q-Fresh. How is Q-Fresh coming along? Will Thai Union sell Q-Fresh to other channels? What is the expected margin and sales growth contribution? I think the key focus for Q-Fresh this year is not necessarily the gross margin contribution. It is really to create presence in the market, establish the brand in the online channel, but also in an offline channel. Our intention is also to expand into frozen retail and to bring the Qfresh brand to consumers in Thailand. And again, the key focus is growth, to establish a growth engine in the Thai market and show Thai Union as a showcase also in the frozen shelf with our own brand. So focus is on sales growth, not only on e-commerce but also in offline, on the shelf, in retail shops.
We have a question regarding the level of SG&A in Q1 17 and why do they increase compared to Q4 16. So we have to say that we have a very seasonal business, and it's more relevant maybe to compare year on year. So if we compare to Q1 16, our SG&A increased by less than 2%. So they are really under control. Compared to Q4 16, yes, indeed, they are increasing by 5%, but depending on the phasing of marketing activities, sometimes it's quite difficult to compare quarter on this one. So we believe the most relevant comparison is to compare with 2016, where SG&A appeared to be really under control.
I think there's a question on the US tax policy. The new administration under Donald Trump has communicated intentions to reduce corporate income tax rates. I think we will need to see the details of that. I think in every country changing tax policies is a humongous task. I think it's good to be prudent and wait for the initial discussions. Of course, as any company, if there's an income tax reduction, that's great for us, it's helping us. But I think we should not be over-optimistic that this has any immediate short-term effect. So I think we should wait for the proposals, wait for the discussions, and then make measured decisions around it, and see what the administration does. Okay, these were all the questions that came through, and with that I move back to Best.
So this is actually we are about the end of time. So this concludes the live webcast session for Thai Union Group for the first quarter of year 2017 result announcement today. Thank you very much for your time and interest in participating in the event today. If you have any further inquiry, please feel free to contact our IR department anytime during office hours, or you can always get us through email. So I wish you have a good day and thank you very much.
Thank you very much. Good evening.
Goodbye.